Southwest profit falls 46% as airline takes urgent steps to increase revenue. And you're probably not entirely surprised. The entire airline industry has been taking a pretty significant beating recently, and it's also just generally fallen out of favor with the public eye as one of the easiest and best ways to get from point A to point B. And we've got some specific details about this. Southwest Airlines on Thursday forecast a potential drop in unit revenue for the third quarter as an oversupplied U.S. market has forced airlines to discount tickets during what is usually the most lucrative time of the year. Southwest said unit revenue for the current quarter could fall as much as 2% over the last year, and non-fuel costs could rise as much as 13% higher, with expenses weighing on the airline through the end of 2024. Quote, "There is simply more capacity on the domestic side than demand right now," said the CEO, Bob Jordan, during the company's earnings call. Jordan said capacity was up 6% in the second quarter and that the airline is working down capacity aggressively to moderate it to 2% in the third quarter. Here's how Southwest Airlines performed in the second quarter compared with Wall Street expectations, according to consensus estimates from LSEG. Earnings per share 58 cents adjusted versus an expected 51 cents, and revenue was $7.35 billion versus $7.32 billion expected. So if it's beating the expectations here, as you can see, 58 cents versus 51 cents and 7.35 versus 7.32, then why are we saying that it's down? And the reason for that is that the expectations were already pretty bad, and the expectations were actually revised down from previously higher than this numbers, and the specifics are here. The Dallas-based airline said its second quarter revenue rose 4.5% from the last year to 735, a record, but its profit dropped more than 46% to $376 million or 58 cents per share. Revenue per available seat mile, which is a gauge of airline pricing power, fell 3.8%, roughly in line with the carrier's reduced forecast last month. So it's not great. And you can imagine that as an investor or a shareholder, that this is not what you want to hear, that overall their revenue, the profit has dropped 46%. And as always, when you hear something about an earnings report or a big company coming out with any information, it's always good to check their stock price. And if we're looking over the last month, it's not been looking particularly great. Over the last 6 months, also not looking particularly great, with a pretty significant drop there. Year to date, not great. And in the last year, also not looking particularly great. Now, with this bad news, Southwest Airlines, like any publicly traded company would do, they released a document talking about what they plan to do to try and fix it. As you can see here, here's the second quarter results, and then here is a solutions document about what they plan to fix. And here is specifically what the CEO said that they were going to do to try and fix this. "We are taking urgent and deliberate steps to mitigate the near-term revenue challenges and implement longer-term transformational initiatives that are designed to drive meaningful top and bottom line growth. As we announced this morning, our implementation of assigned and premium seating as part of an ongoing comprehensive upgrade to the customer experience, one that research shows customers overwhelmingly prefer. With record numbers of passengers choosing Southwest today and work underway to address the challenges we faced, we are excited about what the future holds. We remain focused on developing and implementing a robust portfolio of initiatives to drive margin expansion and improve ROIC performance, all of which has been shared in detail in our investor day in late September. I want to thank our incredible employees for their hard work," and yada, 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 yada. Now, there's tons of mumbo jumbo both in this paragraph and also this entire overview that they have. But the important thing is that they are planning to create more options for customers that are willing to pay for those more options. And what specifically they're doing is actually summarized in a different letter, which is the one that talks about what they are going to do to try and actually fix things. So here it says that they are going to decide to assign seats and offer premium seating options to meet evolving customer preferences and increase revenue opportunities. They're also going to introduce REDEYE flights for sale to further optimize the network and increase aircraft utilization. They're also going to dedicate Southwest officer Ryan Green to lead new efforts as Executive Vice President of Commercial Transformation. So if you want better seats, you can now pay a little more to be able to select your seat or board early like you can with other airlines. And also, if you want late night flights, looks like Southwest is now going to offer those super early in the morning or super late at night flights. And now, before we go on and talk about more about Southwest and more about the airline industry as a whole, if you like these kind of finance deep dives, I try to post 2 to 3 times a week on this channel, and I would love a subscription. But as much as Southwest is struggling, it's also worth noting that basically all the other major airlines and carriers are. If we look at the other competitors of Southwest, then we can see all of them are kind of doing badly in the last year. We can see here JetBlue Airways in the last year is down by 14%. Here we've got American Airlines in the last year. They're down by 36%. And here we've got United Airlines in the last year down by 14%. And here we've got Spirit Airlines in the last year down by 83, almost 84%. And this kind of makes sense from the business side. Operating airlines is more expensive than it has ever been, with a relatively decreasing number of people that are flying. And from the consumer side, it makes sense that flying just straight up sucks now. So you can see from both ends why this isn't working out for people. Airlines have to pay more than ever before to fly an increasingly fewer number of people that actually want to fly. And the people that are flying are having to pay more to actually get to fly, and they are having a worse experience. And we know that this is true because Gallup actually measures this, both in the number of people actually flying and also how people feel about the flights that they're taking. Here you can see U.S. air travel remains down as employed adults are flying less. Fewer Americans traveled by air in 2021 than in any year Gallup recorded between 2003 and 2015, largely because of reduced travel by employed adults. At the same time, those who did fly continued to make multiple airline trips within the past year, albeit fewer than in prior years. And then fewer than 4 in 10 adults flew in 2021. This is the most recent data I could find, but we can presume that this trend is continuing into 2024. 38% of adults polled in December 1st through 16th in a Gallup survey reported they had taken at least one trip in a commercial airliner in the past 12 months. That's modestly lower than the percentages Gallup found in December measurements from 2006 to 2015, when between 43 and 48% reported traveling by air in the past year. Before that, from 2003 to 2005, the figure was closer to levels to today's levels at 40% and 41%. And here you can see these specific surveys and their results. So 40% flew, then 41%, then 40%, then up to 48%, 43%, 43%, 44%, and now it's down to 38%. And before you say it's about the pandemic, that could potentially have some effects, but by and large, the pandemic by 2021 had mostly let up, and so people were starting to travel again. And the pandemic's economic crisis was also pretty akin to the one in 2008, and more people were still traveling in 2008 at about 43% than are traveling post-pandemic, now at around 38%. And you can also imagine there are other reasons. In addition to the pandemic coming around, maybe people are just out of the habit of flying. That's a possibility. You can also imagine that due to inflation, people have less money, so they're less willing to take planes to go on vacations to more expensive locations that are farther away. You can also imagine that something like remote work is making traveling to in-person meetings less necessary because the video technology has gotten so good that instead of flying to Beijing in order to talk with a large company or flying from California to New York, you can just zoom in or Google Meets in and have that conversation pretty much face to face and save a lot of money along the way. And then there are probably some other reasons that I'm not thinking of. So if people aren't going on vacations because they can't afford it, because inflation is through the roof, and employees aren't flying for work because either the jobs no longer require it or the technology has gotten good enough that they don't need to fly to be face to face anymore, if those two groups of people are no longer flying, then that doesn't leave a lot of potential customers. And as for the customer side, flying just kind of sucks now, and people are becoming increasingly dissatisfied with it. And this, again, is also measured by another company called J.D. Power. So airline demand-supply imbalance is good for revenue, tough on customer experience, says J.D. Power. As you can see here, there's a section here, overall passenger satisfaction declines, driven largely by cost of airfare. Overall, passenger satisfaction is 791 on a 1,000-point scale, down 7 points from a year ago. This is the second consecutive year of waning passenger satisfaction, following a 22-point decline from 2022 from 2021. The biggest factor driving this year's decline in satisfaction is cost and fees, which has fallen 17 points from 2022. So you can imagine, in addition to delays and cancellations being up and all over the place and just out of control, leaving thousands of people stranded in airports and in strange countries or cities, in addition to that, prices are going up. So if you have a bad experience and then you try to charge more for it, you can't be surprised when people start avoiding it. Now, all of these issues that I've just mentioned are constant across all airlines. It's not just Southwest. And frankly, if airlines want to gain back the goodwill and trust that they had with consumers, they're going to need to make big changes. But frankly, I don't know if those kinds of changes are changes that airlines are actually going to and willing to make, because it would probably mean a short-term dip in profits and we simply cannot have anything touching our share prices quarter to quarter. Thanks for watching.